ExamPrep.School. Montana Bail Bond Insurance Exam, exam code INSMT-BailBond23 or OPMT-BailBond23. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Bail bond procedures, fiduciary responsibilities, insurance terms and related concepts, purpose and type of surety bonds, surety contracts. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following best describes how a surety agreement differs from traditional insurance risk transfer? A. The surety absorbs financial losses from claims directly, whereas insurance pays a third party for liability exposures without seeking indemnity. B. The surety commits to the obligé to fulfill the principal's obligations if default occurs, while insurance transfers risk from the insured to the insurer for indemnity against loss. C. Surety bonds require policy limits and deductible structures similar to insurance, but insurance policies never involve third-party beneficiaries. D. Insurance agreements guarantee contractual performance, whereas surety bonds only cover property damage losses. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. This option correctly identifies that a surety bond is a guarantee from the surety to the obligé for principal performance, whereas insurance transfers financial risk to an insurer who indemnifies the insured against covered losses. Reason A is not correct. This implies the surety directly absorbs losses rather than guaranteeing performance and seeking indemnity from the principal. Reason C is not correct. This incorrectly attributes insurance policy features like deductibles and limits to surety bonds and misstates third-party beneficiary roles. Reason D is not correct. This reverses the roles of insurance and surety. Since insurance does not guarantee performance and surety bonds are not limited to property damage. Question 2. Which of the following best describes the role of the obligé in a bail bond arrangement? A. The court or governmental entity that requires the bond and receives the guarantee. B. The surety company guarantor of bond conditions. C. The defendant who must post collateral to secure release. D. The bail agent authorized to execute bond paperwork. The correct answer is A. This option correctly indicates that the obligé is the judicial authority or government entity that demands and holds the bail bond guarantee. Reason B is not correct. This confuses the surety with the obligé, whereas the surety guarantees to the obligee. Complete 30 hours of general insurance courses, including 3 hours on Vermont laws, each year. Reason D is not correct. This mistakes the bail agent for the obligé. The agent merely executes paperwork on behalf of the surety. Question 3. After securing release on a bail bond, Michael executes the bond instrument and is released pending trial. Which obligation is Michael primarily bound to under the bail bond agreement? A. Deliver any posted collateral directly to the court clerk. B. Pay the full penal sum to the surety prior to bond discharge. C. Appear at all scheduled court proceedings as required by the bond. D. Notify the surety in writing of every case development. The correct answer is C. The principal's primary duty under a bail bond agreement is to attend all required court appearances. Other duties like paying premium or posting collateral are contractual, but secondary to the core obligation of appearance. Reason A is not correct. Delivering collateral to the clerk is not the principal's duty. Collateral is held by the surety as security. Reason B is not correct. Paying the full penal sum is a remedy for default, not a primary obligation of the principal under the bond. Reason D is not correct. Notifying the surety of developments is helpful, but not the principal's core obligation under the bond. Question 4. As the surety on a written bail bond undertaking for a felony charge, what is the surety's continuing responsibility until properly discharged? A. Refund the premium to the defendant immediately upon first court appearance. B. Initiate bond forfeiture proceedings if the defendant misses any hearing. C. Remain liable under the bond until formal court exoneration is granted. D. Seek release from liability upon the defendant's voluntary surrender. The correct answer is C. Under a written bail bond undertaking, the surety remains obligated on the bond until the court formally exonerates or discharges the surety, regardless of defendant appearances or surrenders prior to that point. Reason A is not correct. Refunding premium upon first appearance is not required. Premium is earned upon issuance. Reason B is not correct. Forfeiture is a consequence of default, not a continuing duty until discharging. Reason D is not correct. Voluntary surrender by the defendant does not automatically release surety without court exoneration. Question 5. Which of the following underwriting findings most reliably suggests a defendant has weak community ties and thus an elevated flight risk? A. Listing a primary care physician in the county medical records. B. Maintaining a local bank account with regular deposits. C. No recorded residential lease or home ownership in the jurisdiction. D. Active enrollment in a local secondary education program. The correct answer is C. The absence of any residential lease or property ownership indicates insufficient local ties, which underwriters view as a strong flight risk indicator. Reason A is not correct. Having a local physician reflects established life ties, reducing flight likelihood. Reason B is not correct. Regular banking activity demonstrates financial commitments within the community, indicating stronger ties. Reason D is not correct. Enrollment in local education shows personal commitment to the area, suggesting minimal flight risk. Question 6. When underwriting a bail bond, which prior failure to appear pattern most significantly raises a red flag for risk assessment? A. A single failure to appear on a minor traffic infraction more than 5 years ago. B. Multiple missed court dates across diverse jurisdictions over the past 2 years. C. A one-time missed deposit payment on a bail bond for an unrelated civil proceeding. D. Completion of a deferred prosecution agreement requiring no court appearance. The correct answer is B. A pattern of multiple missed court dates across different jurisdictions indicates a persistent tendency to avoid judicial obligations, marking a critical red flag in underwriting. Reason A is not correct. A single dated minor offense does not establish a recurring non-appearance pattern. Reason C is not correct. A civil bail deposit miss is unrelated to criminal court appearance history and is less predictive of flight risk. Reason D is not correct. No court appearance was required under a deferred prosecution agreement, so there is no failure to appear event. Question 7. An indemnitor applying for a $100,000 bail bond provides the following financial summary: $50,000 in cash savings, $20,000 in marketable securities, $80,000 equity in real property, subject to a $120,000 mortgage, and an annual income of $75,000. The insurer's underwriting guidelines require liquid assets of at least 50% of the bond amount and a net worth of at least 200% of the bond amount. Which aspect of the indemnitor's financial profile most likely warrants underwriting concern? A. Combined cash and securities constitute 70% of the bond amount. B. Annual income represents 75% of the bond amount. C. Equity in real property held with an existing $120,000 mortgage. D. Total net worth represents only 150% of the bond amount. The correct answer is D. The net worth requirement is 200% of the bond amount, but the indemnitor's net worth is only 150% of the bond, which fails the guideline and thus is the primary underwriting concern. Reason A is not correct. Liquid assets equaling 70% of the bond exceed the 50% requirement, so this factor does not raise concern. Reason B is not correct. Annual income ratios are not part of the specified asset-based underwriting criteria, making this irrelevant. Reason C is not correct. Equity in mortgage property counts toward net worth, and by itself does not breach the specified guidelines. Question 8. Under a typical bail bond surety arrangement, which of the following situations most clearly constitutes a claim event triggering surety liability? A. Principal's failure to attend a scheduled arraignment. B. Prosecutor's entry of a null prosequi after bail posting. C. Judicial clerk's misfiling of bail paperwork. D. Surety's request for substitution of collateral item. The correct answer is A. The correct answer is based on the fact that a claim event arises when the principal defaults on the core obligation under the bond, namely appearing in court. Failure to attend a scheduled arraignment directly triggers the surety's liability. Reason B is not correct. A nolle prosequi dismisses charges but does not trigger a claim because no default on appearance has occurred. Reason C is not correct. An administrative filing error by the clerk does not constitute a principal default under the bond. Reason D is not correct. Requesting collateral substitution is a surety administrative action, not a principal default event. Question 9. Which statement best distinguishes claim presentation from bond forfeiture action in a bail bond context? A. Claim presentation is the obligee's formal demand to surety for payment. Bond forfeiture action is a judicial decree terminating the bond and imposing a penalty. B. Claim presentation ends the surety's obligation. Bond forfeiture action mandates indemnity payment to the obligee. C. Claim presentation requires a prior court order. Bond forfeiture action can be initiated directly by the surety. D. Claim presentation depends on the principal's consent. Bond forfeiture action proceeds without any party's approval. The correct answer is A. The correct answer is that claim presentation involves the obligee submitting a demand for payment under the bond terms, whereas bond forfeiture action is the court's formal process that nullifies the bond and imposes a penalty. Reason B is not correct. Bond forfeiture action does not itself mandate indemnity payment. It declares the bond void and penalty due. Reason C is not correct. Claim presentation does not require a court order. It is a contractual demand process. Reason D is not correct. Neither process depends on the principal's consent. Both are imposed by obligee or court authority. Question 10. What is the next required action for the surety to undertake according to standard indemnity recovery procedures after it has paid a court-ordered forfeiture judgment? A. Apply the principal's collateral held by the surety toward the reimbursement. B. File a lawsuit against the indemnitor to enforce the indemnity agreement. C. Send a formal written demand to the indemnitor for reimbursement of the paid amount. D. Request a bond reinstatement from the court to recover paid funds. The correct answer is C. The correct answer is to send a formal written demand to the indemnitor, as issuance of a written notice of claim is typically the contractual prerequisite before initiating legal action or applying collateral. Reason A is not correct. Collateral may only be applied after the indemnitor fails to respond to the formal demand, not before providing the required notice. Reason B is not correct. A lawsuit cannot be filed until the indemnitor has been given the required written notice of claim under the indemnity agreement. Reason D is not correct. A bond reinstatement pertains to preventing forfeiture rather than recovering funds after a judgment has been paid. Question 11. Which statement best captures the primary purpose of a public official bond? A. To guarantee private businesses against losses arising from governmental contractual non-performance. B. To protect the public by requiring officials to fulfill their duties and reimburse losses from official misconduct. C. To secure performance of public agency infrastructure projects when officials manage construction contracts. D. To underwrite personal debts of officials unrelated to their governmental responsibilities. The correct answer is B. This option is correct because public official bonds ensure that officials faithfully perform their duties and compensate for any misconduct, thereby safeguarding the public interest. Reason A is not correct. Private business losses are addressed by contract bonds, not public official bonds designed to protect the public interest. Reason C is not correct. Performance bonds for infrastructure projects secure contracts but do not address fidelity of public officials. Reason D is not correct. Personal debts are not covered by public official bonds, which focus on official duties and public protection. Question 12. In the context of a public official bond, which party is typically named as the obligé? A. The surety company underwriting the bond and guaranteeing the official's performance. B. The government or public body that hires or oversees the public official. C. The public official whose faithful performance is secured by the bond. D. Any private individual claiming a personal loss due to official misconduct. The correct answer is B. This option is correct because a public official bond names the government or public body as the obligé to ensure officials act in the public's interest. Reason A is not correct. The surety is the guarantor, not the obligé who receives protection under the bond. Reason C is not correct. The public official is the principal whose performance is guaranteed, not the obligé. Reason D is not correct. Private individuals do not serve as obligés on public official bonds. The public entity is protected. Question 13. In the context of judicial proceedings, what is the principal purpose of a court bond? A. To indemnify non-parties for losses arising from contractual breaches outside of court judgments. B. To ensure the timely payment of statutory licensing fees imposed by administrative agencies. C. To guarantee that a party will comply with court directives and satisfy obligations such as cost payments or injunctions. D. To shield the surety from penalties due to regulatory infractions unrelated to court mandates. The correct answer is C. This option is correct because a court bond obligates the principal to fulfill court-ordered requirements, such as paying costs or performing injunction responsibilities, providing financial assurance of adherence to judicial directives. Reason A is not correct. Court bonds do not cover contractual indemnities for non-parties. They guarantee compliance with court-imposed obligations. Reason B is not correct. This describes administrative licensing fees which are not secured by court bonds used in judicial proceedings. Reason D is not correct. The purpose of a court bond is to secure the principal's performance, not to protect the surety from unrelated penalties. Question 14. Which of the following correctly aligns a type of judicial bond with a specific obligation it secures? A. Replevin bond guarantees payment of criminal court fines by a defendant pending property return. B. Attachment bond secures payment of damages if property is wrongfully seized under court order. C. Guardianship bond ensures compliance with appellate procedure deadlines in probate court matters. D. Appeal bond secures fiduciary duties of estate executors during appellate review proceedings. The correct answer is B. An attachment bond guarantees that if a court-ordered seizure of property is later determined wrongful, the principal will pay resulting damages, protecting property owners while court actions proceed. Reason A is not correct. A replevin bond secures return of specific property, not payment of criminal fines. Reason C is not correct. Guardianship bonds secure faithful estate management by a guardian, not appellate deadlines. Reason D is not correct. An appeal bond secures payment of a judgment and costs pending appeal, not fiduciary duties of executors. Question 15. When a court appoints Sarah as executor of her late uncle's estate, it requires her to obtain a fiduciary bond. The beneficiaries are concerned she may mismanage estate funds. What primary function does this bond serve? A. Guarantee payment of the executor's compensation, even if estate assets are insufficient. B. Protect beneficiaries by indemnifying them for losses due to executor misconduct. C. Provide funds to settle the decedent's liabilities before distributing assets. D. Limit the executor's personal liability for estate debts beyond the bond amount. The correct answer is B. The fiduciary bond secures compensation for beneficiaries if the executor mismanages or misapplies estate assets, ensuring they are indemnified for any losses caused by executor misconduct. Reason A is not correct. This bond does not guarantee executor fees. It secures restitution for beneficiaries rather than payment of the executor's compensation. Reason C is not correct. Although estate debts must be paid, the bond specifically protects beneficiaries against fiduciary misconduct, not general liability settlement. Reason D is not correct. The bond does not serve to cap the executor's liability, but to ensure that beneficiaries can recover losses from executor wrongdoing. Question 16. Which statement best describes the primary purpose of a performance bond in construction and service agreements? A. To ensure the contractor completes the contract work, protecting the obligé against financial loss from non-performance. B. To guarantee compensation to the obligé for schedule extensions resulting from project delays. C. To ensure subcontractors and suppliers are paid for their labor and materials under the contract. D. To provide financial coverage for losses due to damage or theft of the contractor's equipment. The correct answer is A. The correct answer is aimed at securing the contractor's fulfillment of contractual obligations and protecting the project owner, obligé, from financial harm if the contractor fails to perform. Other choices describe payment bonds, schedule clauses, or insurance coverages unrelated to guaranteeing performance. Reason B is not correct. Compensation for schedule extensions is typically handled through contract provisions or change orders, not a performance bond's function. Reason C is not correct. This describes a payment bond, which guarantees payment to subcontractors and suppliers rather than ensuring contract completion. Reason D is not correct. Coverage for equipment damage or theft is addressed by property or liability insurance, not a performance bond. Question 17. A municipal government, obligé, required a performance bond from a contractor, principal, and surety for a public park renovation. When the contractor abandons the project due to financial issues, what is the surety's main obligation under the bond? A. Ensure completion of the contracted work by hiring a replacement or completing it directly. B. Pay the obligé the bond amount in cash to cover project losses. C. Fund all change orders and cost overruns incurred during construction. D. Oversee daily site operations and supervise subcontractors on behalf of the obligé. The correct answer is A. The correct answer is that the surety must ensure project completion, either by hiring a replacement contractor or completing the work directly. Reason B is not correct. Performance bonds guarantee completion of work, not a simple cash payment for losses. Reason C is not correct. Covering change orders and overruns exceeds the bond's obligation, which focuses on completing the original contract. Reason D is not correct. Supervising daily operations is the contractor's role. The surety's duty is to secure completion if the contractor defaults. Question 18. What is the primary purpose of a license bond for a regulated business? A. Guarantee the completion of projects according to contractual terms. B. Ensure compliance with state laws and protect the public by covering penalties for violations. C. Provide insurance against third-party bodily injury or property damage. D. Fund business growth and capital expenditures for the licensee. The correct answer is B. A license bond is designed to guarantee that the bondholder will adhere to statutory and regulatory obligations, providing financial recourse if the business breaches laws or regulations, thereby protecting the public and government interests. Reason A is not correct. This describes a performance bond, which guarantees contract completion rather than regulatory compliance. Reason C is not correct. This describes liability insurance, which covers third-party injury or damage, not regulatory adherence. Reason D is not correct. License bonds do not provide capital funding. They guarantee compliance with statutes, not business financing. Question 19. A state licensing board acting as the obligee on an electrical contractor's license bond receives credible reports that the contractor performed unlicensed plumbing work resulting in property damage. After confirming the violation, what action must the board take first to enforce the bond under typical bond terms? A. Provide the surety with a written notice detailing the principal's default and request corrective action within the penal sum. B. Suspend the contractor's license and notify the surety of the license revocation. C. Seize the full penal sum immediately and distribute funds to the damaged party. D. File a separate civil lawsuit against the contractor without engaging the surety. The correct answer is A. The correct answer is to furnish the surety with written notice specifying the nature of the contractor's breach, and to request remedy within the bond's penal amount, as most license bonds require formal notification before the surety's obligations are triggered. Reason B is not correct. This option focuses on license suspension rather than initiating the bond enforcement process by notifying the surety. Reason C is not correct. Seizing funds immediately is premature because the surety must first be given notice and an opportunity to address the claim. Reason D is not correct. Bypassing the surety and suing the contractor neglects the bond's contractual mechanism that requires surety involvement first. Question 20. Which of the following statements best describes the primary purpose of a miscellaneous surety bond? A. To guarantee completion of performance under private construction contracts. B. To ensure compliance with fiduciary duties of public officials and trust administration. C. To provide a financial guarantee for obligations that do not fall under any other specific bond category. D. To secure the faithful performance of duties by court-appointed executors or administrators. The correct answer is C. The correct answer is a financial guarantee for obligations not covered by other specific bond forms. Miscellaneous bonds fill gaps in statutory or contractual requirements. Reason A is not correct. Guaranteeing private construction performance is the role of contract performance bonds, not miscellaneous bonds. Reason B is not correct. Ensuring public officials' fiduciary duties relates to public official or fidelity bonds, not miscellaneous bonds. Reason D is not correct. Securing court-appointed fiduciaries involves judicial or fiduciary bonds, not miscellaneous bonds. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.